Hello, and welcome back to our YouTube channel. I'm Jess, consulting accountant here at Riverview Portfolio and Property Tax Advice. If you're buying a doer-upper and think you can save on stamp duty because the property is uninhabitable, this video is for you. A recent Court of Appeal case, Muden versus HMRC, has made it crystal clear what uninhabitable really means for stamp duty purposes. And unfortunately, it's not as many buyers might have hoped. In this case, Mr. and Mrs. Muden argued their property was uninhabitable and therefore should qualify for uninhabitable property relief. The property had been uninhabited for months before purchase. It was unsafe to live in, needed major repair works, and they included full electrical rewiring, a new boiler, pumps and pipes, a new roof over the boiler house, repairs to broken windows, the kitchen needed stripping out, and there was a rat infestation to deal with. But the court said suitable for use as a dwelling doesn't necessarily mean ready for you to move in tomorrow. The legal definition is much broader than most people might think, and the government's updated guidance reflects this. The guidance says that uninhabitable dwellings relief will only apply to a small minority of buildings. The temporary removal of bathroom or kitchen facilities before sale, substantial repairs being required to windows, floors or a roof, or structural defects that can be repaired or rectified are just not enough. These are all common issues which can be fixed and do not prevent the building from fundamentally still being a dwelling. So let's take a minute to compare the Muden case to an earlier case where the claimants were successful. The case I'd like to refer to is PM Bewley Ltd versus HMRC, a case that took place in 2019. This property had been uninhabited for a period of years before purchase. It deteriorated significantly over this time, and in addition, when the elderly owner who last lived in the property moved out, the heating, copper pipes and floorboards had all been removed. The refurbishments required to make the property suitable for use as a dwelling would have also disturbed asbestos, making it at least uninhabitable during the renovations. Although the works required in both cases were to some extent comparable, the property owned by PM Bewley only marginally didn't meet HMRC's definition of a dwelling. The key difference, the property would have genuinely been uninhabitable during the renovation work due to the asbestos in the PM Bewley case. Therefore, most doer-uppers will still attract a higher residential rate of stamp duty, not the cheaper non-residential rates under uninhabitable property relief. The takeaway? The bar for claiming uninhabitable property relief is extremely high. Suitable for use as a dwelling does not mean ready for immediate occupation. So before you assume your fixer-upper qualifies, get advice first. We can review your case and help you avoid a costly dispute with HMRC. Thanks for watching. If you found this video useful, give it a like, hit subscribe and turn on notifications for more tax insights.